Good evening, class.
Good evening.
Welcome to week 2. Okay. All right, let's get started. Just a couple of housekeeping things. Everybody's doing fine after last week. I did talk with the course developers this week to try and get a understanding of what they're trying to accomplish, because there was a little bit of confusion as far as some of the assignments. They intentionally awarded the individual assignments in week 1, the 1.3 A and B. They made you aware of them in week 1, but they didn't make them due until week 3 and 5 so that you'd have time to work on them. That does get it confusing when it's labeled as a week 1 assignment, but yet they're not required until week 3 and 5. So you've got it until then to get it done. You don't have to rush to get them done during the week 1 or 2 time frame. And their desire was to allow you time to apply concepts as you learn them as you go through. So that's the reason why it was set up the way it was. What I would recommend is I put a note in the classroom today on the individual assignments. Even though they've created a link in the classroom for them, I would recommend going ahead and posting your individual assignments in the Dropbox. That way your responses and your grades are confidential, and it doesn't get broadcasted all over the classroom. The team assignments they want to have posted in the classroom so that you can learn from each other and see how each other are handling your situation. So that's the reason why they have it set up that way. The other question that I was asked was about the availability of templates and examples for these team assignments. And the reason why you don't see those in there is because while we're applying the same concepts, the way you present the results and the way you analyze the results can be specifically unique to the problem that you're dealing with as a team. And so it's unlikely that every team is going to make their presentations, their PowerPoint slides look similar. In many cases, they're going to look radically different based on the nature of your case. And so that's the reason why they don't provide templates. They want the team to have the flexibility of presenting the results in whatever fashion you feel tells the story the best way. You will note, if you go back and review the slides that were in the classroom for week 1, as we talked, there were like 70 of them that week. There are a number of examples of various ways to show those analytics in that slide presentation. There's also additional material in this evening's class slides that we won't be covering in class, but I would encourage you to go through them on your own time, and you'll find also additional material in there that will help explain some of the concepts and examples in more detail. So hopefully that helps to clarify what's the way they've got this class set up. This was evidently the first time they're running this class, or they ran it the last 5 weeks with this new format. But that's the reason behind the format that you're seeing in this class. Any questions beyond that information that you might have about the format or what they're doing? Okay, then we'll move along. All right, this evening we're going to talk about activity-based accounting. That your reading has that material as well as our discussion. Again, there's probably 70 slides in there. I've gone through and pulled out the ones that we're going to talk in detail this evening. And we're going to look at just the account-based systems. And as we talked about in class and in the reading, there's basically been 2 approaches to accounting. And this slide kind of gives you a feeling for those approaches. Historically, traditional accounting used to consolidate expenses into broad enterprise-wide type categories: labor, raw materials, overhead. And they would apply the cost to the entire organization, either by allocating it by percentages or just based on whatever logic that leadership came up with. That approach was very common in General Motors and large corporations. And today there are still a number of large companies that still use traditional accounting concepts. you'll find that probably the majority of companies that I've worked for anyway did not use activity-based accounting. That although it is the trend in business today, it still is not a dominant methodology for the approaches that we use to apply cost as it relates to business. The activity-based accounting, on the other hand, examines individual processes. So in traditional accounting, we look at large buckets of types of expenses. So for example, buying your raw materials to make your product, all those raw materials would be categorized into a general account called raw material. And depending on the size of your company, you might have sub-accounts within raw materials that captures particular types of raw materials like plastic or films or coal. But for the most part, they're done in very large buckets of general expenses. Activity-based accounting is really designed to be tied into the business process. So rather than have these large buckets, we look at the process, your business process, and we assign the cost as it relates and the expenses as it relates specifically to the process map that your company has for a given manufacturing or service process. Within an organization, this cost can be therefore have overhead type costs being applied to multiple locations within the organization. So it can be applied to every manufacturing center could have a raw material account and have the raw materials that relate specifically to that process assigned. Same thing's true with labor and all of the other associated expenses. As it says here, the General Motors example of ABC would evaluate the individual production line of each of the cars that they produced, for example, a Corvette, and if more than one plant produces the same car, they would actually have separate cost models for each of those plants as it relates to that model. And so you would then be able to compare a Corvette built in one plant to a Corvette built in another plant. And you'd also be able to compare a Corvette to a Mustang and determine whether or not the costs associated were relatively different. I understand Mustang's not General Motors, but I just picked a title. A great example of application of ABC is the Cannibal is a textbook example on page 58 through 70. They show a very clean, crisp example of how ABC cost accounting can be applied. And so I would encourage you to look at those few pages if you're confused as far as how we could use those concepts. Does everybody see, or does anybody have any questions as far as the breakdown of what the difference is between traditional and activity-based accounting? Any questions? Okay. All right. So traditional costings. What went wrong? Why did people start worrying about leaving this concept of traditional cost accounting? Part of the reason was, as some of the reading shows, that the Harvard Business Review found that in the 1900s, only about 5% of our cost was actually classified as overhead. But as companies have matured and our processes have matured over the years, overhead has become a significantly larger piece of our cost structure and can reach as high as 50%. So what's going on in business, from what you're reading or from your personal experience, what's going on in business that would have shifted the overhead expense so drastically from a 5% category to a 50% category? Anyone want to hazard a guess? Sorry, go ahead. Go ahead.
I would say technology.
Yeah, that is probably one of the single largest reasons for it. Back in the 1900s, Most of our production was being done by workshops. It was very labor intensive, and it was labor and raw material. Over the 20th century, with the influx of mass production and the manufacturing, automated manufacturing process, companies have invested more and more money in overhead, meaning plants and equipment and hardware and technology rights. And so because of that, that category dramatically increased. One of the things we find when we're dealing with cost and when you're dealing with how do you effectively run a business is you try to avoid having cost centers or cost accounts that represent very large percentages of your overall cost. For example, in this one on the screen, having your overhead account be 50% of your cost and using a traditional cost model where that account would just sit on your balance sheet with 50% of your cost in one line, it makes it very difficult for leadership and for management to try and find ways to manage that cost and ensure that you've eliminated the waste. And so what we try to do in both cost in activity-based accounting, or even if you're using traditional accounting, what you try to do is you try to ensure that your accounts don't get to that kind of size. As a matter of fact, in the last company I ran, I tried to keep any single account no more than 30%, and that was to be the exception. And the reason being, then you can establish a strategy to manage that cost, and you can get your hands around it. If you just throw all of your overhead expense into one account at 50%, then without going in and line item by line item looking for those costs and what drives them, it's very difficult then for you to do cost assessment and to look for cost savings when it's all rolled together into one large lump sum. So as over the 20th century, as our fixed overhead expenses started to become a larger and larger percentage of our operating expense, it became obvious that we needed to come up with some other way to measure cost and to evaluate cost. One of the natural outgrowths of activity-based accounting was the concept of continuous improvement and looking for incremental components and incremental gains. Because as you use especially activity-based accounting, it's relatively easy to tie that concept of accounting into continuous improvement and into ways of trying to find incremental gains and improvements in your costs and in your operating costs. Traditional overhead added to the amount of direct labor and machine hours consumed by the product. So in traditional accounting systems, you take that large overhead and then you add your labor, and it becomes a very large number that's hard to macro manage. The assumption was that indirect hours is somewhat or always related to direct labor hours, and they're not necessarily. They're often completely unrelated. So what we try to do is we try to have accounting concepts that allow us to capture what the direct labor is and what the overhead accounts are for that product line, and determine whether or not a particular product line is consuming too much or too large a percentage of the overall expense. So activity-based accounting tends to be focused on a product line application, and it tends to be a subset of your overall operation. So in a complex manufacturing operation like your company's, in a activity cost accounting, you would literally have a separate set of books for every significant segment of your process. And what you're doing is and when you look at that data, especially the accounting department looks at that data, they look for times when either there's a significant shift or where costs are being applied incorrectly, they're looking at where costs are being applied and you can't find value add for why that cost is there. So when you use activity-based accounting, you're trying to tie the behavior of your accounting principles specifically to the process and looking for areas where, for example, in a manufacturing role, if you have a significantly higher percentage of labor, direct labor in one part of the production line over another part, then you might want to go back in and look and see, is that because we haven't automated that segment of the business effectively, or that we're throwing labor at it as rather than solving a technical problem that we have in the production line. All of that can come out when you're looking at an activity-based accounting. You wouldn't necessarily be able to see that in the financials anyway in a traditional cost accounting, because it would all be lumped together. So this chart is an attempt to just show what the trends have been in certain areas of cost over the 20th century. And we talked about the advance of technology. The trend's been that the percentage of cost associated with technology has been increasing. Product life cycles have tended to have less of an impact. Life cycles of products seems in general to be getting shorter. We're introducing new versions and new products in a much faster pace than we did historically. Complexity, products are becoming more complex. Because of the technology in particular, capital intensity and the need for capital has become higher and a larger percentage of overall cost. Channel distribution, because of globalization, we see a lot of companies are seeing the cost of operation increase in that area. Quality requirements, quality is no longer a quality culture is no longer considered to be a plus, something it's a given. They expect to see it. Companies expect to see a quality system and quality products coming out. And therefore it's an embedded cost that you can't just avoid by being willing to make a substandard product. The marketplace won't allow that any longer. And then the number of products and the productivity diversity. We're seeing more and more diversity in our product offerings. The cell phone is a perfect example. Back in the 80s, there were a handful of examples of the types of cell phones and phones that you could get. Today, there's a myriad of examples, and that complexity has caused a need for a cost accounting type of activity base, because your product lines are now, there's so many of them and there's so many subset products that you need to be able to assign the cost to the specific product line. As far as understanding again how the cost has looked historically, in a traditional accounting system back in the 1900s, you had a relatively small percentage of overhead. We talked about that earlier. Materials remained relatively constant, and direct labor was higher because we did more in the way of assembly, manual assembly processes. Over the time, as we've moved toward optimized manufacturing processes and the introduction of activity-based and cost accounting, what we found is that our overhead has become a larger and larger percentage. Raw materials stayed consistent, and because of the overhead investment and the automation and computerization of our production processes, our labor cost has dropped as a percent of total cost. So this is basically shows you what the stages or evolution of manufacturing, what impact they've had in those large buckets. And so as this category of overhead has grown significantly, it's become more and more important that leadership be able to break that up into manageable pieces and not into large buckets of miscellaneous data. Any questions about the chart or about that trend? Is this something that it represents what you've seen in your business model over the historical element of the company? Or does anyone know?
This is Ryan. I've been in aerospace for about 20 years, so I think the mix has stayed pretty constant relative to technology and change.
Okay.
But I don't know. That would be a good example.
Yeah, so you haven't seen a significant technology shift. It's been pretty consistent. Okay. Well,
yeah,
then you're
in the high tech. I think you see it more in small business or mid-sized companies.
okay.
If I had to venture to guess.
Yeah, and it's possible that it just happened to you all earlier in the industry, and that your technology is relatively stable. And if that's the case, it may be less critical unless you're operating still in a very high overhead racket. Even if you're not seeing this trend, if your fixed overhead cost is this kind of significant percentage of the total, then you still could benefit from this type of an ABC accounting system. One of the other things that we find as we go into ABC is that one of the things you try to do is you try to determine whether or not a cost is fixed or variable. And especially under traditional accounting systems, a lot of companies just make the assumption that certain kinds of costs are always fixed. And the problem you have with that is then if you do have fluctuation in your manufacturing process, meaning seasonality, a downturn in sales or an upturn in sales, if you ineffectively classify your cost as fixed rather than variable, then as you see a drop off in volume or a significant increase in volume, you may make the wrong management decisions because you believe that you can't impact the cost structure. And so you have to keep the people on board because it's a fixed cost, and you can't have a fluctuating workforce for various reasons. And by doing that, when your sales drop off, then your labor content may get out of skew. And I've seen companies do that for various reasons. One being that if they have a very highly qualified and trained workforce, they're worried about losing that skill set. So they will tend to keep people on when they may not need to, and therefore they'll show it in their accounting system as being fixed when in fact there are variable. There are variable labor costs, there's fixed labor costs, and there are business models where in even manufacturing you can have both fixed and variable labor in the same business unit, and you can, and in that kind of environment, you use that variable labor to help you keep your cost of labor down when you have or up when you have a fluctuation in sales volume.
Okay. Helen.
Yes, go ahead, Helen.
I have a question on that slide that you're looking at. UTC is the way they function is they manufacture, they offload more and more product, all the manufacturing aspect, to low-cost countries such as China and India, and we're seeing more and more of that. Obviously, that was brought to the front with Crane or Carrier air conditioning, but we're seeing a lot of our products all going to India for manufacturing. So what's here in the States is mostly overhead to manage the contracts and sales, and all the manufacturing cost is going down, but that's because it's going offshore.
Right.
So that looks very much what we're doing today.
And that's a very common, and what some large American corporations are doing is they're trying to keep in the United States the parts of their business that they feel they have a significant competitive advantage in, and they don't want it to therefore be available to people offshore. So for example, if product design and R&D was you had a competitive advantage in that area, then that part of the process would stay in the United States, and you would offshore your assembly where they're implementing that technology but not developing it. especially if you're in a mature industry, that your labor content is not dropping over time due to automation. You will see it moving offshore to lower costs because they don't have this kind of a trend that's being forced downward based on less labor. It's being forced down based on the cost of labor. And so it would look like this, but you might be, if you were to track, and what I've seen companies do is track a chart like this that's not only dollars, but man hours consumed or man hours used. And what you'll sometimes find is you'll find that the man hours used is constant. The drop in cost is purely because you've moved to a lower cost labor. And so if you find if you're in a case like you're talking about, one of the things that your company should be tracking is not just the cost of labor, but the hours consumed, the labor hours consumed per product, or the hours utilized per process. One of the reasons why companies should track both of those when they're in your kind of a business model is that over time, labor rates are adjusting. Now, it may not happen in our lifetime, but the cost of labor in India and China and so forth, it's all rising. It may not be rising as fast as ours is, but it is going up. So if you're not careful and you're not monitoring hours consumed, then you may all of a sudden find a shift in the cost of hourly labor occur, and the company then gets in trouble because they've not been optimizing their processes to get the labor hours out of the process. They've taken advantage of the cost of labor to do it, and then when the labor cost starts going back up again, they're not prepared to compete because they can no longer find the cheap labor. Either that or they end up running like the clothing industry does. They run all over the world looking for cheap labor, and they don't stay anywhere long enough to establish themselves other than to chase the labor. Does that make sense?
Yes.
Okay.
Yeah, well, it's not being reduced by technology, it's just being reduced by labor.
Right.
Right,
and that'll only go for so long. Now, the company may not care because that's 20 years from now, but most evidence would indicate that places like India and China, their labor cost is going to eventually equalize or come very close to ours over time. Okay. Some of the concepts as far as that we try to keep in mind because they give us the advantages of ABC is cost should be recognized as a component of performance, but not but not ellipse the performance. In other words, we don't want to just be focused on recognizing that the cost is in the right unit without paying attention to the performance as well. So ABC says basically that that you assign all the costs to the specific process, and such as with labor, by doing that you can then lose track of the fact that you need to watch performance as well, because you make the gains based on lower costs and you neglect to realize that you need to also be looking for performance improvements. Globalization and creating an effective competitive marketplace is one of the reasons why ABC was developed. If you're going to try and compete in a global market, then you need to be able to capture your costs based on the production lines where they exist, and not just by assigning corporate overhead. Traditional cost accounting systems make it very difficult for internal managers to manage concepts at the process level. And so ABC accounting is designed for companies that have business unit type mentalities, where you want to be able to take a business unit within an organization and make it a profit center and allow managers to impact their business unit's performance rather than just be a subset of the larger corporation. It allows you to give better insight. It allows you to have to go beyond just a general ledger type of accounting system. You then can specifically look at a business unit and determine whether or not that manager is managing their business unit effectively. I don't know if you've ever worked in an environment, but I have, where people they looked like they were doing a good job simply because the nature of the way the accounting system operated, it hid inefficiencies by the fact that it was using a fixed cost recovery. And so if I was using twice as much labor as another business unit, but I was charged based on a percentage of sales, I might look better than I really was, and I was being rewarded without necessarily showing that I was giving the corporation back the same profit as someone else is for a similar amount of dollars spent. So in like ABC accounting, what we often do is we reward a manager based on how many dollars do you have, is your business process requiring, and what return on investment is that business unit generating on those dollars specifically assigned to your business unit, rather than how much did the company make or how much did the finished product make. And in the meantime, you're consuming, but you're not adding to the value. Okay. The ABC is said to be is basically a cost tracking mechanism rather than versus an allocation system. So all of what we've been talking about this evening, traditional accounting is basically a cost allocation system. They use some kind of, the bean counters use some kind of a formula to say, I've got $100 worth of labor to assign. Who am I going to charge it to? In traditional accounting, they would probably go in and say, all right, you're 25% of the sales, so you get 25% of the labor. And that's how they allocated it. In ABC, we tracked the costs. We would actually take the payroll to keep track of what the payroll is just for that business unit, and then charge them specific to their product. Now, that may seem very simplistic, and why wouldn't a company do that? And 9 times out of 10, it's because in the larger companies, they just don't want to take the time to keep track of it down to that level. The ABC accounting system is effective, especially at a project management or a complex manufacturing process, but it is not all things to all people. It is not necessarily, you shouldn't run out and just automatically assume that every company should be using activity-based accounting. It's a matter of just, you have to determine whether you're going to get a return on investment that justifies it. It takes a lot more work. It takes a lot more of a complex accounting system. It does allow you to ensure that inefficient business units are burdened with the amount of the burden they're putting on the organization. So if you're using lots of labor and no automation, then you should be paying a higher significant burden for that labor than someone who's invested the money to do the automation and to not need the labor content. Does that make sense? Any questions on that so far? As it says right here, you can get distortions in ABC because activity cost is only as good as the accountants that are applying the cost. You can get distortions if your business models are not properly built. It requires a company to have an effective process mapping methodology, and it requires the companies to ensure that the data they're collecting is accurately coded, and they need to understand what the cost drivers are, what those elements of the business that are driving those individual business units. So It isn't perfect. It could be just as messed up as badly done traditional accounting can be. Uh, the reason we expose it to you is that this is the trend of the future for most companies, and it's an alternative that, especially if you're in a high volume multi-product line company, it's probably the most effective way to allocate your cost. All right, so ABC by itself provides no benefits. ABC is only a tool. However, the information ABC provides is a great catalyst for change. So ABC is not, the end all to everything. Where it can be very effective is if you're in a company that's gone through a significant business model change, or you're merging two companies together that have different accounting systems or process systems. Cost accounting can be, an activity-based accounting can be a very effective way of deciding what business units and which elements you should keep and which ones you should invest in. It's a very effective way of deciding from a strategic standpoint where you should invest your capital. If you're using traditional accounting systems, it's very simple for leadership to make false assumptions on where they should spend limited capital for equipment. In an ABC style system, you can very effectively set measurements that determine and validate whether or not the dollars spent are going to give you the return on investment that you want from when you have, especially when you have limited capital resources. Okay. So traditional products costing simplistically just allocates costs. So in traditional accounting, what they're basically doing is saying, I just got this invoice, who do I charge? And they're usually looking for some way to do that in a allocated or as a percentage of activity. But it's basically, traditional is simply the allocation of costs. I got in a cost, I need to get it into the balance sheet, where do I put it? Activity-based accounting, on the other hand, is tracing costs based on where it was actually consumed. So the model you see here requires you to understand your processes and understand when stuff comes in, where it's physically going to. So we end up having to have different kinds of receivers and BOMs and so forth that actually capture where that raw material is going to. Your receiving department has to provide to the accounting department a specific job or specific department or process that material was sent to and consumed. Returns and material to inventory, again, you can't just throw it back into raw materials. You've got to actually receive it back in from the business unit that received it, because you're allocating those costs to a specific process. So ABC track is based on cause and effect. What organization requested the raw material, requested the cost, and where was it used? Where was it consumed? That complexity does not exist in the traditional side. So your traditional right here, the cost comes in, it's consumed in a general sense, manufacturing a particular plant, and it goes to a group or set of products. Activity-based, we actually take the cost and assign it to the activity that consumes that service or cost, and then where that activity is applied to a product. Do you see the difference between those two approaches? Or do you see where there could be an advantage or disadvantage, especially in today's type of marketplace? Any thoughts? So you see right here it says activity drivers or activity costs are assigned to products based on unique consumption patterns. Where was the product consumed? Where was the service or raw material consumed? Here, costs are misaligned to product bases on assumptions or linkages based on usually such things such as direct labor hours. So they're put into large buckets, and they're not allocated specifically to a market product. As far as what you see in an accounting ledger, this is an example of what you see if you're looking at an accounting concept when you're looking at ledgers. So for example, this traditional side, we talk about large buckets. We spent $5 million in labor. We had $2 million in benefits, $175,000 in business travel, maintenance, material, interest and taxes, and then that's your total budget, your general ledger budget total. So this is what you would see in a traditional general ledger account in your P&L, in your business P&Ls and balance sheets. Most of us, this is what we're used to seeing. And we'll do calculations to figure out what percent of sales salaries are and so forth. In cost accounting, you see these kind of numbers. They eventually total to the same thing, but instead of salaries, you're seeing costs allocated based on the way the warehouse is, or the way the product is used. So design and installation systems, purchasing of material, warehouse material, incoming inspection, outgoing logistics, performance management. So these are profit centers or business unit centers that are consuming these products. So underneath each of these general categories, there are accounts that look like this, but they add them up relative to the process. So that means that when I'm sitting there trying to figure out whether their warehouse is operating effectively, I can see what the total cost of running that warehouse is. You can't see that over here. So it's really a matter of the way you're running your company and what you're holding accountable. If you're in a company that's trying to hold managers accountable for what they do, then this kind of a activity-based accounting allows you to factor in and monitor that person based on their performance. It's very difficult to do that over here in this kind of a ledger. Any questions? Okay, let me see. Come on, it's locked up on me. Just a second. Let me get it restarted. Okay. And this is just another chart showing you a similar type of activity. You've got the traditional type accounts on this side, and over here you can see the breakout specifically to an activity base with BOMs and maintenance routings and so forth. So the same cost structure is being designed based on your process map rather than on a bean counter supply system. If you were trying to manage your business, which of these type of ledgers would you think would be easier for you to manage your business process as a profit center manager?
And so this is Ryan. I mean, obviously you want more resolution, and that's what this offers, because each one of these in the activity-based view Each one of these accounts then breaks down into this to salaries, equipment, and so everything can still be summed. It just offers an additional layer of resolution above and beyond what's already available.
And especially if you're a project-oriented company, ABC is ties nicer into the way we run projects. It doesn't mean you're not going to pay attention to salaries, because the salaries are over here. But these are functions within your process that you can then manage. So good, okay. So methodology, ABC involves 2 steps, tracing processes. First, they track resource costs to the actual process where they're consumed. And the second step is they trace subsequent pooling activity costs to actual products delivered. So you're gonna allocate costs specifically to where they're consumed, and you're going to allocate costs specifically to where the services are being delivered. It requires an effective process mapping methodology. If a company does not do process mapping and doesn't do them effectively and keep them up to date, then this approach to accounting is going to do them very little good. And one of the ways that ABC accounting can get out of kilter is when companies do not keep their process maps current. You almost have to have a religious fever to know that every time you change that process map, you've got to sit down with the cost accountant and you've got to ensure that all of the accounting principles relative to that map are modified as well. Otherwise, you lose the advantage to this accounting system. This just shows you an example of a warehouse process for ABC where and there's a couple of slides in here, but basically what they're showing you is that they've mapped out this warehouse process with all the elements, and then this particular chart's talking about salaries and material and facilities, and they're allocating the blue right here for facilities, and then the red and green here for materials, and then the personnel. They're allocating those costs to specific subsets of the process, and accounting then captures them in each of these buckets for the purposes of generating the spreadsheet that you saw. These are the components that we normally use in ABC modeling: resources, activities, cost objectives, cost drivers, and these are elements we talked about last week in your homework assignments. Resources, any item where an organization incurs an expense, cash flow. Examples might be personnel, material, capital equipment, facilities, so forth. They should parallel your organization's income and expense statement. Be sure to define the periods, the months, quarters, and years. So when we're thinking about component resources, these are the kind of factors that get engaged. And so you have personnel, you have material, facilities, and in this case, you're going to track each of these individually as it applies to your business model. Activities can be considered synonymous with the process of the organization performs to deliver the product to its customers. So when they talk about activity and activity cost accounting or activity-based accounting, you can think of activity as the same thing as process. They're one and the same. So high-level costs are captured in that way. They could be cross-functional. Activities can be cross-functional because you can have other departments applying R&D, engineering, quality. Those cross-functional costs can be captured also at the process level. They must be solid, meaning you have to be able to show where you're getting those numbers from. We don't just divide and come up with a percentage. We actually capture the actual costs associated with it. Activity, products, and organization delivery to the customer. So here we're talking about cost objectives. And so the other day Last week we were talking about things like figuring out what your cost objectives are for your projects. Well, the actual products an organization delivers to their customer is the component. The customer will be both internal and external, because you may have a process that you're providing internally to your organization. Internal customers and their products are key to tracing and understanding overhead costs. So we have a tendency to focus on external customers and those costs, but in a cost accounting, ABC accounting, you also have to capture that internal cost and charge those to the business unit. Otherwise, you have service organizations that are consuming and spending on behalf of the company. They have to be able to charge them somewhere. So if you've got a quality department that's providing auditing or some other function to a business unit, they actually charge their internal expenses to their internal customers. So you want to capture that in your cost model. Examples of cost objectives would be part of the warehousing cost, systems designs, meetings held, where you're bringing in people from other departments to help you. Those would be component costs that you might want to capture in your model. And then as far as cost drivers, up to this point, all components discussed have been important and necessary, but not understanding your cost drivers or having little dedication to the proper capturing of the data collection for cost drivers can lead to ineffective and distorted activity and cost accounting. So what they mean by all that basically is saying that in your process, you need to understand what's driving those costs, what drives you to consume product, to consume services, and if you know those, then you can ensure those costs are being captured. If you don't, then you can end up getting a distorted cost model similar to in traditional, because what they'll do is they'll allocate it instead of applying reality, instead of applying the real cost to your product line. What you're trying to do again in ABC is you want to try and ensure that the costs being applied are those that are specific to your business unit. If there's a part of the corporate overhead that you do not use in any capacity, then you shouldn't be seeing those costs charged to your business unit. So a cost driver is an agent that causes activity to use resources to accomplish work. So operating cost drivers, factors that cause or impact the activity, like cost, time, or quality. Activity is the work performed. What is it you did? So the cost drivers are why. The activities are what did you do? That then drives a rate or a fee, which leads to a performance measure. And then you use those performance measures to ensure that you're providing effective control of your process. So, for example, if the driver that you're looking at in your cost is the amount of indirect labor that you're using in your process, and the activity you're using them for is to process purchase orders, and the rate that you're using it at is 10 hours a month for X number of orders processed per month, then you would come up with an indicator that shows what that rate is, and then by tracking the cost, the ABC cost for that function, if the rate you had was whether it's dollars or hours, let's say it's 10 hours a month, and you're starting to use 20 hours a month, then you've got a performance issue, and you can go back and figure out, based on an assessment of that process, why that's happening. And hopefully it's because your sales are up, not because you're being less efficient. And so that's one of the ways we can use ABC cost accounting to develop these performance measures. And for the purposes of your projects, that's where some of this application in your project could be effective, because you can set those performance measures to ensure you're being effective as you're moving through the design of your project. Okay, two types of cost drivers, resource drivers and activity drivers. The resource drivers trace resources to activities based upon actual consumption. So basically it looks at what is being done, what activity is being carried out, and who's consuming it. And usually it's for example quality, and assigning the quality cost to each of the divisions or each of the product lines might be an example. Activity drivers trace pooled activity costs to cost objectives based on actual consumption. So if you have costs that as a company that you're sharing, then you would take your part of that pooled cost and assign it to your business center or to your product line, because it's not a service or a activity that belongs to you. You're using pooled resources from some other department or some other part of the company or from a vendor. So cost driver examples, personnel hours required, labor, executive teams, square feet of facility. A lot of times in plants under ABC accounting, you don't charge people based on some arbitrary percentage of the warehouse or the plant, but you actually go out and you measure the square footage of the footprint they're using, and then that percentage of the footprint cost of the whole plant they pay for. Raw material amount required, historical cost validation. You look at raw material. You can assign the raw material that's being consumed specifically. Areas where we get it, even in ABC cost accounting, where we get into trouble is like in a plant that, let's say, electricity or power. Unless you're so sophisticated that you've got meters at your production line. Often those kind of costs ends up being allocated out of a pool environment simply because it's not cost effective to try and figure out what you're actually consuming in your electricity or your power. Inventory requirements, transportation requirements are all cost drivers that you may see in your ABC components. And then again, this is just that same warehouse map showing the various components, and here they've taken the hours or the percentage and they've applied it then against the standard to come up with a dollar amount. And all this is trying to show you is that you're allocating this $100,000 worth of personnel across the various units. In this case, the QA and the product A, and this total here adds up to the 100,000 or close to it. And the same thing down here. These costs are being allocated. So when it's all said and done, each of these subsets or work centers then has costs that's associated specifically to their performance and to their operation. So process maps are critical to ABC. We've said that previously. ABC is a means to a beginning. Continuous improvement, reengineering, and benchmarking are all subsets that take advantage of ABC type accounting. It is not an end to itself. You don't do ABC cost accounting strictly because that's what that's what your bailiwick is. It's got to have a business reason for doing it, but it does tie very nicely to a continuous improvement culture or a re-engineering culture. Process maps are the logical starting point for activity cost accounting. It gives a feeling of internal and hierarchical relationships. You're able to build your component costs based on that process map and allocate your costs accordingly. And what you normally will find in accounting systems is they'll assign cost center codes to every single one of those process map steps, and when something is consumed or used, it gets assigned to that specific account. As far as the right drivers, resource drivers are normally easy to determine as they have a direct or often observed relationship between activities, so they're going to be pretty straightforward. Activity drivers, the second stage, requires more analytics. Activity drivers are often related to particular outputs, not necessarily to processes. Use of time, historical data can assist in determining what the correct driver that you choose. So resource drivers, pretty straightforward. Activity drivers tend to be process related, and they tend to be more likely to get allocated in most operations, because they just want to take the time and the effort it takes to keep the detail at that level. Okay, as far as the analytics, if you're sitting as a team and you're saying, okay, well, that's all fine and good. What am I going to do with this ABC accounting information when I get it? We use these concepts to determine root cause for poor quality. When we have a poor quality environment, ABC analysis and using that kind of accounting system helps for root cause analysis because you can break up your costs relative to what you find with that specific part of the process or the process flow that's causing your problem, and you can get the allocated cost for that. You can calculate the cost of poor quality more readily with each root cause or poor quality situation, because once you identify the part in the process that's causing you that quality element, it's relatively easy then to capture that element's part of the cost model. So when you have to figure out the cost of quality, it's a relatively speaking, it's an easier process to do. You combine common root cause to determine the total financial impact of the root cause. So you pull all the root cause and all the associated costs together, and that will allow you to determine what the impact on your organization is as it relates to trying to figure out what the root cause and the cost of quality is. Performing a cost-based analysis to evaluate potential solutions. So if you find, once you've got that root cause determined and you know what it's costing you for that, then ABC accounting makes it easier for you to then evaluate each of the alternative solutions to determine which one's going to give you the largest return on your investment, or the closest ability to offset the cost of the quality activities you're undertaking. Confidence levels are relatively easy to set when you try. When you do your root cause analysis and you come up with your proposal for your improvement and the cost of what it's going to take to do that, and what the net impact is going to be on the organization when you're successful. All of that allows you then to effectively determine your comfort level on, or your confidence level on, the likelihood that you're going to be successful, because the activity-based accounting allows you to get to the specific elements that are driving that loss in revenue or that quality issue. This slide is designed for, and given the nature of your business, you're obviously not a nonprofit or a government organization, but what the purpose of this slide was simply to show that ABC accounting also works in not-for-profit situations. What we do is we still apply all of the costs, but rather than being concerned about profit, we're more concerned about the savings that we can and the offset of expense. So, because even though people talk about a nonprofit, nonprofits still make money. They just make money to offset expenses or services that they provide to other organizations. So financial metrics are not always applicable to nonprofits. Instead, we need to use appropriate performance metrics that provide insight and improve an operational understanding of the performance of the organization in question. So the ABC accounting can still allow them to say, when we do this service, this is what it normally costs us if we're operating efficiently. And then if that metrics starts to falter, then it's an indication that we're being inefficient in the way in which we're carrying out our service. Oftentimes benchmarking is used by organizations, these type of organizations, to try and determine what kind of a performance metrics we can more accurately use to make those kind of predictions. But what you're trying to do in a nonprofit or a government organization is use this approach to simply look for patterns and for metrics that allow us to determine our efficiency. And they're not dealing with profit, they're dealing with how efficient are we, and what are we providing our services in an effective manner. Do you all see the way this could be used in a not-for-profit type of application? I'll assume you do. Okay. So if you're in that particular regards, if you're trying to do an estimate, obviously you have to have the cost per time unit for a specific resource. So one of the things you would have to determine if you're trying to do an estimate or of performance is you're going to have figure out what the cost per time or per resource is. Time unit consumption per transaction. So it's where they're not talking about profit, they're talking about how much time do we consume. So if you're providing licenses to the consumer, what cost of or labor component or software component or overhead component are you costing to produce that one license? And then if you're tracking your costs in that manner and it's costing you 10 units to produce a license, and all of a sudden it's taking you 25 units to make a license, then that becomes your indicator that you've got a process issue, and then you go back into the process to try and find it. So that's what they mean when they say that they use information, this kind of information they use to try and determine estimates for performance-based basis anyway. Okay, this is pretty simplistic. This is just a formula that's been provided just to show how people can use data to try and determine metrics. And really all we're just saying here is that it's pretty simplistic. I'm sure you all are well beyond this, but what they're saying here is if you have 20 employees and you're trying to figure out what kind of resource that is, then they're working 52 weeks, 40 hours a week, 60 minutes an hour. Then with 20 employees on a year, you've got 2,496 minutes per year of resource. You then take that resource, and if you're producing a million service units a year with that amount of resource, then you divide that, and it's 2.496 per unit, and that becomes your metrics then to try to measure against, to try and find out whether or not you're being effective when you compare it against historical data. So again, this is a very simplistic, and I'm sure you all are well beyond that, but they put this in here for those that are not been involved in a business environment. Cost per minute formulation, this is just, again, it's a slide that just shows from that information how you can then calculate a metrics that takes a production situation and figures out a cost per minute. And I'm not gonna take you through that. It's pretty fundamental. But if you're not familiar with it, this is a calculation that shows you how you could arrive at a metrics that talks about cost. In this case, cost per minute for an activity in the maintenance department. And then this is just a hypothetical spreadsheet that you might see in almost any kind of a business environment. When you're trying to figure out a process map and how the costs are associated. So all they're doing here is these are the resources. A could be labor, B could be water. It's whatever the resource was. Using the previous slide, you come up with a cost per minute for that resource, and then minutes that process consumes then tells you what the total cost is of that resource for the 4 different resources. And then all they're doing here is they're subtotaling it to show you what your total resource cost is, raw material add-in, and then the process cost. So very simplistically, for one of your processes that you're doing for one of your team projects, you could use a very simple spreadsheet like this to calculate and determine what your process costs are as it relates to your to setting standards for performance. So if this was what it was currently taking for you to perform your project, and you were trying to then improve performance by 20%, you could then back into what these rates would have to be for you to be able to realize that 20% savings. Is one application. So again, very simplistic, but it's just an example to show you how you can come up with a process cost map. Any questions on that? Or am I assuming it's simplistic and it is not? Anyone? Okay. All right. This week, there's a number of assignments due for the course. The first one here, what you're going to find is the rest of the assignments other than the 1.3A and B that you're working on. Some of you have already done some of those, but other than those 2 individual assignments, the rest of the assignments for the course are team assignments. And you're basically building PowerPoint slides toward the final project that, as we've done previously, that you'll present in week 5 as a team. These assignments are being posted in the classrooms so that you can each feed off each other and can see how other teams are addressing their issues. And you're encouraged to provide feedback if you see something in there that makes sense that you'd like to share with your teammates. But you're basically developing PowerPoint slides. 2.1, you're going to be working on your problem statements and summarizing some information. The slides are pretty detailed, so I think you've got everything here you need to be able to deal with metrics and measurements and so forth. 2.2 is right here. Similar. Both these assignments, one of the things I was going to show you is that they do say down here that it's due 48 hours prior to the end of the week. So in that case, we're talking about that'd be Sunday midnight. The reason for that due date is because they want you to post and review your peers. And so if everybody posts on Tuesday night, then you don't have an opportunity to have peer review. So I'm not going to put a stopwatch on a team, but for the good of the learning process and for you getting feedback from more than just me, I would encourage you to shoot for that Sunday posting if you can, so that teams can give you feedback. Your peers can give you feedback. Any questions about where we're heading as far as those assignments?
This is Ryan. I had a quick question on the process map. So for our particular project, we're not actually going to, at least at this point, we don't believe that we're going to change our process.
Okay.
We're going to travel down one of our rework loops less often.
Okay.
Essentially, so our process has rework loops in it, and that's the scope of our project is to eliminate that. And
so what you might do is you might do your current process map simply to show what the process is you're working on, and then you might have slides instead of showing a future process map where you're going to change it. You might simply just explain to the observer what element of the process you're going to eliminate out of the process by this modification. And if you're eliminating it, there should be a way to develop a metrics that says, if we accomplish this, that's going to eliminate this amount of cost from or time, if it's not money, from the process. Does that make sense?
It does, yeah. And I think we'll find a way to graphically represent the quantity of time that we're going through that rework, and then current state is we may go down a rework loop 3 times, future state is either 0 or 1.
Exactly. And so in a sense, you really do have a future state. Your future state is you're not going to have to go through rework or go through the loop. You're going to eliminate that phase. So if you wanted to if you wanted to keep it simplistic, you could say that there is a future state, and the future state is we're not going to, these parts of the process are going to be eliminated. And this is how we're doing it.
That's clear. Thanks.
Okay. So for week 2, you have 2 team assignments, 2.1, 2.2. The 1.3A is due in week 3, as I remember properly, and some of you have already completed that assignment already. At this point, you should be using these slides and working on your team final presentation throughout the rest of the course. And then we have, of course, the discussion assignment. It's to clarify, because there was confusion. The way they've written this syllabus, it can get confusing. I'm only grading you on participation within the discussion question. So even though, let me go back here, even though these talk about giving feedback to your peers, I'm not grading you on that. If you choose not to participate, then you're just cheating your peers out of that feedback and your opportunity to help them out. But I'm not impacting your grade based on whether or not you participate in these discussions. When they talk about discussion question points, we're only talking about the discussion question that's in there for the week. Is that clear? So it's an honor system basically that says, hey, help your peers, give them feedback on their projects in the team assignments. But I'm not gonna grade you for that part of the assignment. Y'all are graduate students, and we anticipate that you're going to be willing to support your peers. Any questions on that? Okay, as far as week 2 is concerned and the wrap up on week 1, does anyone have any questions? Have I addressed all of the confusion that we had last week as far as what's due when and what you're going to be graded upon?
This is Guillermo. I have a couple questions actually. For the first case study assignment, we were able to we posted up, and then you put a comment that we had to put it in the digital Dropbox.
Well, I'm not telling you to do it now because you'd already posted. What I'm suggesting on the second paper, which is due no later than week 5, put it in the digital Dropbox rather than in the discussion forum. And the reason for that, just to give you confidentiality.
Okay, and then just to be straight on the details is one of them was based on the AT&T, and then the other one's on the hospital case study, correct?
Yes.
Those are the only one or the other. Okay.
Right.
Just because the syllabus had a total of 4, so I didn't know what the other ones, if we were going to really touch base on to purchase them or not.
I'll have to look ahead myself to see if they're in the discussion in the future weeks. They're intended to be supplemental for the purposes of helping you learn the material. I don't believe there's a written assignment, though, that's assigned to them.
Okay. All right. Then I'll just look at those 2. Thank you.
Yeah. Okay. And most of you will notice I am starting to emphasize some of the fundamental skill sets of APA. And I'm not taking a lot of points off, but I am, at this point in the program, I am taking a few points off if people are continuing to make some of the basic APA errors. And when I say basic, I'm talking citations, references, format. Those, I'm not talking about the high-end, more difficult factors, but those are things that graduate students that you fundamentally need to know how to cite and how to write a reference. If you got comments like that and after you review my feedback, you just have no clue what I'm talking about, then email me and I'll try and give you more details. But it's not normally our practice to tell you what the fix is, because we want you to go look at the manual and learn it rather than have me tell you. Okay? Any comments about that? I do not take off significant points. I'm not going to, I think I'm being more than fair, but I've got to start getting everyone's attention on learning those fundamentals. Other than that, I think everyone did well in week one. You're about the quietest group I've ever had. So if I sometimes sound like I'm rambling, it's because I'm trying to get you the information, but because no one is interacting back with me, I don't know if I've got you going down a primrose path or whether you understand it, you're just falling asleep on me. So if I would encourage you that if I say things that you don't understand, jump in and stop me so that we can clarify. But right now it's becoming more of just me lecturing and you all sitting there listening, and that's not necessarily the most effective way to transmit this information to you, especially accounting. There's so many things people don't understand that if I don't know what it is you're struggling with, then it's hard for me to address it. I just have to randomly assume that you know what I'm talking about. Okay? Because this is a topic that'll put you to sleep anyway, so let's try not to put me to sleep too. Let's try and work on it together. Okay? I can tell you, accounting is not one of my favorite topics either. So, but it's unfortunate we have to learn it. It's the backbone of our business. Any questions before I let you go for the evening? Have I addressed or answered all your questions and concerns? Okay.
I believe so.
All right, then I'm going to assume we're ready to go. Again, y'all are doing great. I don't anticipate any issues. This is really not a difficult class. The hard part about it is just trying to explain the concepts and again, it's much easier to do this face to face than this one is on a phone, because I can't show you necessarily or answer specific questions. If you have any questions, drop them to me in email if you want. If you just didn't want to bring them up in class, and I'll try to get you the answers and bring them up in the next class. All right? Okay. Then that's it for this evening. I'll look forward to seeing you all in class this week, and I'm looking forward to seeing the continuation on your team projects. I'll stay online in case someone has any questions they want to ask. Otherwise, you're free to go. I've got the attendance.
All right, thanks, Jerry. Have a good night.
Thank you. Good night.
Thanks, Jerry.
Hi, Jerry. This is Guillermo.
Yes, girl.
Hey, I just have a quick question. I appreciate the feedback on the paper, but did you need me to go back in there and make any of those corrections, or is it just more for my personal for the next following paper?
It's for you. I don't ever expect my students to resubmit. If it's so bad that the grade is going to hurt you, then I'll tell you, hey, I think you might want to resubmit. Doing, I'm simply trying to give you more than just, hey, you got X percent, you got 99% of the points, good job, and then you sit there and wonder, well, why didn't I get 100%?
All right. Yeah, I appreciate the feedback, and I'll tell you right now, writing is not my strongest, but I mean, yeah, it is helpful and to see what we need to work on, but I was just curious to see if you needed further updates for it or not.
No, what I'll do is next week, what'll happen is next week when I get, or your paper, whenever you submit your next one, I pull up your old one and because I've got multiple monitors, I'll pull up your old one and your new one and I put them side by side and I'll look to see whether or not you're continuing to make the same mistakes or did you try to address them. And if I see you're trying to address them, then I'm obviously a lot more tolerant than if I just see the same mistakes over and over again.
Yeah, and I guess it's just me getting used to it because I've had other professors where they've asked me, they've hit me on a couple points for, you know, say like the page number, and then I'm like, oh. So I'll look at the handbook and try to address those this next paper. But
sure. And if I ever sent you one and you say, gee, I can't find anything in the manual or I don't understand what you mean, just drop me an email back and tell me what it is you don't understand, and I'll try to get you either a page reference or an explanation. Most of them are pretty rudimentary. It's the format of that reference. It's the format of that citation. And a number of you forgot what you need to do is take Word and create a template that has the margins and everything set up the right way. What happens is you all jump in and start typing away in Word and forget that Word is set up as either centered or with a no margin on the right hand side. And so and that's what happens is and they forget that what you really want to do is take a blank document, sit down with the manual and set up a template that has all of the margins, all of the headers and everything all pre-set up, and then just use that every time you write your paper. You pull up that template and you use it, and it'll all be done. You don't have to remember it every time.
Okay.
And that works. Yeah, right. This time it was primarily people had right margins. They forgot to set a right margin, and the other one was they forgot that there is an author with this paper, so you got to have the author's name in that footnote and in that reference.
Okay.
All right.
Yeah, I'll definitely try to do practice on that stuff. But
sure. Well, I didn't take that many points off. I'm not going to cause somebody a letter grade. I'm just trying to get your attention. And
no, that works.
Okay.
Appreciate it. Thanks.
Thank you.
Good night.
Hi, Professor. This is Roland.
Yes, Roland.
Sorry about all the email back and forth between us this week.
No, that's fine.
Yeah.
Hopefully that document helped. As a matter of fact, I got permission last night that document you can share that with the other students if you want to, if it's easier to try to explain it.
Okay, I'll forward it off to everybody. What I wound up doing was I would give quick summaries if somebody had a question on it.
Yeah.
I think really the only issue was that there was some verbiage that I think that like after the course we probably need to go back, like some things say reply instead of add post and things like that. It was just a lot of people saying, well, should I do this or should I do that? And that's it.
Yeah, it is a brand new shell, and one of the things I was going to do in week 4 was tell everybody, hey, I'll give anyone that wants to take I would send you out a Word copy of this syllabus and say anyone that wants to put in a red ink recommendations on things they feel is confusing, I'll give 5 bonus points, and then I'll accumulate that and I'll submit it to the course developer as feedback to see if they can't make it clear. And so I'll probably do something like that, and that way people are encouraged to help to give me what they think is making it, and it could be confusing or it could just be that it's flat out wrong. I don't particularly agree with calling an assignment a 1.3 and then say it's not due till week three. It's confusing.
Yeah.
Is it a weekly assignment or is it a week 3 assignment? Why not just put it in week 3? Yeah.
Yeah. We ran into something like that during our benchmarking course where it was it would give it on 1 week and then it was due like 2 to 3 weeks after.
Yeah, and I keep telling them, why don't you just assign it in week 4? They'll see it and they'll start. And what they say is, well, we want them to start working early. And I said, well, I don't think that's making them work early. I think it's frustrating them, or they're rushing to complete it in week 1, and what you really want them to do is take more time and give it a little bit more detail and do it in week 3. So it's not accomplishing what they think it is. And
yeah, I can see that. Yeah, because I did the Cambridge Hospital one,
yeah.
and it was a little bit. Some of the stuff was not as apparent as it could have been if I probably waited a week and did it.
Right, and if you
but other than that, I think.
Yeah, and if you decide you'd like to redo it, you can do that. Although you did well on it, but
yeah, no, I think I did. I think I did fine. It was just a lot of info to crunch together.
Yeah,
I think that's what it was. Like the ACT is a lot more drawn out. The Cambridge one is like it shows you exactly what it is, but to get it to try to shrink it to give you a good summary of everything, that was just more the toughest part.
Yeah, and frankly, that's one of the reasons they do it is they're trying to get us or get you to learn how to take a lot of data and give a concise summation.
Yeah. All right. Sounds good. Anything pops up, I'll let you know.
Great.
Other than that, I think everything should be good. If anything pops up, I'll send you an email.
Yep, I'm here to help. So if somebody's getting frustrated, just let me know. That's the last thing I want to do is get someone frustrated.
We'll do.
All right.
All right. Have a good week.
You too.
All right, take care.
Bye-bye. Thanks for the help. Bye.